Hello. Welcome back to another review. Today we will be reviewing the trade that was placed on the 31st of December, the last trading day of the year. And this will not only be a review, but also a small lecture on how I actually start my daily analysis. Next to that, I will also teach you in this review, this small lecture, how you could trade the counter side of an opening range gap. So normally when you trade a premium opening range gap, you will be looking for shorts, and when you have a discount opening range gap, you will be looking for longs. Now, in today's review, you will see how you can actually trade the opposite side and when you should look for that opposite side trade, because this is not something that happens daily. This is something that happens every now and so often, and it's actually fun that it happened on the last trading day, and it actually had a very nice result for me myself. Next to that, you will also be given an update on how I will be continuing this channel and what you could expect from me. So let's first start off with the review of today and what steps I always take. So before 9:30, I always check what the current status is on the opening range gap. So right now I have outlined two lines. This line, which is the opening price of 9:30, and this striped line, which is the settlement price of yesterday. As you can see right now, we are in a premium opening range gap. We have created a premium opening range gap, which indicates that just from looking at the opening range gap, that we are right now with price in a premium, and that we should be looking for shorts. But when the gap is created, the first candle has printed. As you can see, we have a premium opening range gap with a gap size of 67 handles. But when we look at the algorithm for the new day opening gaps, the new week opening gaps, and liquidity biases, then we will see that everything turns out to be bullish. And what does this actually mean? Well, if the new day opening gap and the new week opening gap is bullish, that means that there are more clusterings of those gaps to the top side than to the bottom side, as is the most recent one is also to the top side instead of the bottom side. And then with some smart calculations, I get the average for being at bearish or bullish. That is basically the new day opening gap and new week opening gap bias. So as it is taught in the 2024 mentorship of ICT. The next thing that I look at is the weekly liquidity bias. So is there liquidity for example, if the new day opening gap bias is bullish, is there still liquidity left to the top side for the weekly candle? In this case, yes, there is. And the same is for the daily bias. Like in the mentorship of 2024 of ICT, it is thought that you should look at the previous 3 daily highs and lows. So in this case, is there more liquidity to the top side than to the downside on the daily? That means that we are also very bullish, because right now that would indicate that we are in a discount. And if we zoom out, you see that the red lines is the sell side liquidity and the blue lines are the buy side liquidity. Right now we have 4 buy side liquidity pools and 2 sell side liquidity pools, indicating there's more liquidity to the upside than there is to the downside. So that indicates that based on the liquidity level, that we are currently in discount and potentially moving from discount to premium. Combine that with the bias from the new day opening gap and the new week opening gap, being bullish with the most clusterings above in this case, you should be looking for bullish price action. But when you combine that with a premium opening range gap instead of a discount opening range gap, you first would have to wait for price to come to a local session discounted price. And why do I say that? Because if we have a premium opening range gap, it already says it, we are in premium price. We are right now at the opening itself, we would be looking for shorts. But the higher time frame is saying bullish, so we do not want to enter here yet. And how do you combine that with first presentation? Well, just as looking at the previous 3 daily highs and lows, you also can actually draw further, like draw the first presentations of the previous 3 days out. So we have one here, and today's first presentation still to be formed. If we look at price, we already know that this first presentation is in heavy premium. So we are not looking for a trade from this fair value gap. If we are looking at this opening range gap, this first presentation fair value gap is actually in a discounted price compared to where the opening range gap currently is. So without seeing the current day's first presentation being formed, we already know that if price actually comes to this first presentation, that is in discounted price compared to the opening range gaps, so it is in discount for this session, we know that we can potentially expect a entry drill, a reversal at this price point. So let's see what happens when first presentation for today gets created. So first presentation here is right now created, and as you look at the price, since we are looking for bullish momentum and that the current first presentation is in the premium area of the opening range gap, it is described as a bearish fair value gap for this session's liquidity and opening range gap. This fair value gap, however, is classified as bullish, as I already mentioned. So right now we have 3 fair value gaps. Today's, the one of 2 days ago, and today's and the one of 2 days ago are both in premium price, while we are looking for bullish momentum. So we already know that we cannot trade from these 2 first presentation fair value gaps. So the only bullish first presentation is this one. So in a lecture of ICT, what he mentions is that when you are utilizing previous used price ranges, you want to see that they become a balanced price range. And you can perform the same concept of balanced price ranges to fair value gaps a little bit. So if we would want to utilize this previous day's first presentation for a bullish trade to make it a balanced price range, we want to go through it, above it, and reject to then go up. So this is how you would utilize the theory of balanced price ranges, to my understanding. That's very clear that this is to my understanding. Perhaps ICT will explain it further later on, but this is to my understanding how I utilize it, how I myself utilize it, and I have seen great results so far with it. That's why I made this strategy, so that I can actually know how profitable my strategy right now is. So anyway, so if you want to do a counter trend trade in comparison to the opening range gap, you would have to search for a first presentation fair value gap that is in this instance in a very discounted price, so below the opening range gap. You want to see it being moved through to the downside, then to the upside, and then do your basic first presentation entry. So let's have a look on how that looks. So price in the first few minutes, it is moving around It's nothing very important is being done right now, but this is the first indication. Finally, now we are starting to pay attention because the price has moved and closed below the previous day fair value gap, moves up, and then we close above it again. So we have gone below it and above it. So we have that paint roller analogy from ICT. We have gone to the downside, to the upside, and then down again. And then it is filled in with the paint. So because of that, we can place an entry as what we normally do. And for trade purposes, you will then still target the 25 midpoint and 75%, but in this case it will be in reverse because this is a premium gap, so 25% is here, midpoint is there, 75% is here. So for your counter trend trade, your first target will be 75%, then midpoint, then 25, then full gap closure, reversed, and then 125%. Why you see that my current take profit on the 75% is not being taken is because I have a rule where I want a minimal 1-to-1 and where price gets moved up to the next liquidity target if the 1-to-1 has to be moved up. All right, so let's see how that ends up. So we have a nice take profit at the 25%, and eventually we get stopped out, which is totally fine. We had a very nice trade here. This was like $700 or something like that. And because I have a rule that I can trade twice, like as you can see, I've with my AMP Live account I can trade twice. I'm able to place an entry again here. We get entered again, and we hit our take profit of 25%. We move to break even, and then we get stopped out on the remaining contracts, and we end the day here. And with that, we actually made a very nice $1,300 on the last trading day. But I'm going to show you something what actually happens with me. Right now, this is how the trade should have been. And I noticed that with my personal account, there was a bug that I right now have solved in my strategy, where the take profits were not executed very well. So instead of 1,300 profit, I actually had a profit of 200. And why is that, you may ask? Well, I will show you. So let's get back to the 31st. Here we go. Let's hide the strategy. And you will see that my entries here is that instead of the layered take profits, I have actually bought 7 contracts here, sold 6 there, and then I got stopped out here. I bought 7 contracts here, and then I actually got stopped out without taking profits here. And that is because I saw, eventually I mentioned that I saw a bug in the logic that I programmed for counter trend trades, and that actually made me lose this trade. But I still had a nice day. I had like $200 in profit. But right now it's fixed, and you know, every day when I see a small bug, I will just fix it. All right. So with that, with this trade, I actually had 4 trading days on December, and I ended the month with, I think it was $1,800 in profit with 4 trading days. So out of the 20 trading days that there are in December or in a month, I only traded 4, and I did a review on all of them, including this one. And with those 4, I managed to get a profit of 1,800, which is very nice. And I actually had my first payout. I grabbed my first payout from AMP Global. So when I finished the trading day, I immediately put in a withdrawal, and within a few hours, I actually got the withdrawal paid out. From that $1,800, I actually retrieved 1,000, and with that, I also really want to personally thank ICT for putting out his content and having the patience and time to share his knowledge, because this everything that is being done here is solemnly what I learned from his 2024 mentorship, and I am extremely grateful. And it's actually changed my life. Like, I don't want to get too emotional about it, but I really want to thank him for that. So yeah, ICT, you probably won't see this, but with your content, your patience, and your time with putting out the things that you do, it's changed my life. And now, before we get all theory, etc., I want to go over what will be the future of this channel. So I promised you that I will be giving you a small thing for the future of the channel. And what do I mean with that? I will be trying to post a daily bias given in a quick YouTube short format around between 8:30 and 9:30 every day. So I will be posting my new day opening gap and new week opening gap biases and what I expect for that day. So in that regards, that you know how my algorithm, my programmed algorithm of the ICT 2022 mentorship is looking at the current day, and I really hope that you guys, well, will utilize that to your own extent. So yeah, I hope that you learned something today in regards to trading counter trend opening range gaps with a higher time frame trend that is bullish. And yeah, if you have got any feedback or if you liked the video, leave a like, leave a comment, and well, I talk to you guys next time. Bye bye.